Good morning, everyone. In today's video, we're going to give you an update on the current situation. We'll basically provide you with some general analysis, both on the stock market and, of course, an update on the crypto market as well. Of course, let's remember that we are not financial advisors. We're just providing general analysis because we are traders. All right, now I'd like to start talking for a moment about the S&P 500, which despite the stock market is still basically at $7,000. The crypto market seems to have basically started to price in a sort of early retracement, almost as if it's anticipating a drop, even in the stock market as well. Now, I wanted to show you a rather particular situation. That is, we noticed that on the 3-week time frame on the RSI, every time the S&P 500 has approached these areas, it has then experienced a sort of retracement. Obviously, this doesn't mean we're at the top. It will probably also lead during the year to new all-time highs above $7,000. But we can see that every time the stock market has reached this trend line, still on the 3-week chart, and not just the S&P 500, but also the Nasdaq. In a similar situation, they then experience kinds of pullbacks, sometimes much deeper, sometimes less so. But generally, they often hover around 7 to 8 to 9%. Other times, however, much more like, for example, when there was the Trump crash several months ago, but that was an exception. Generally, though, normal corrections are around 10% more or less. And in reality, for quite a few months now, especially on the S&P 500, corrections like that, we haven't seen any. As a result, could the correction in BTC have anticipated something that will also happen in the stock market in the coming months? However, I wanted to take a moment to talk to you about Bitcoin's condition, especially by looking at volumetric charts. As we can see, this is a volumetric trend line that starts from around the beginning of 2019. In 2019, basically, it started to create a first impulse, which then led to the following bull market up to the 2021 peak. Afterwards, during the 2022 bear market, the price finished its decline at the volumetric level, still on this trend line, which, as mentioned, started in 2019, which in 2022 basically created a subsequent support that was respected. Then, later on, in 2023, and at the end, or rather the beginning of 2025, there was another touch, which was essentially the touch when Bitcoin reached the $80,000 area. And from there, it once again started moving toward new all-time highs. So, what happened next? But then, basically, a sort of macro-bearish divergence formed, which then led the price to break downward with a retest, this one here, around $97,000. And then a very strong bearish impulse that, from all indications, it probably signaled the definitive start of a sort of downtrend that will likely last for a period of at least several months. Actually, this type of breakout, or rather structural breakdown in terms of volume, started even earlier from the daily time frame, and not at $97,000 as we saw with the retest earlier, but already when we were here, around $110,000. What does this type of structure make me think of? This observation leads me to believe and consider the possibility that in the long term, when Bitcoin eventually finds some short-term localized support zones, not necessarily a macro bottom, but just a temporary bottoming area, it is highly likely that it will then start to experience a significant surge in trading volume, which will obviously also be reflected in the upward movement of the price, until we probably reach this specific volumetric trend line again on the standard daily chart time frame. Now, the target can't be defined because it's not, for example, like the RSI, which can have a sort of reflection on the price through certain indicators. But at the moment, I think that in the coming months, when BTC finds a local bottom, which we'll soon look at where that might happen, and when it starts a relief rally, which could even last several months, and typically relief rallies in bear markets also tend to be very significant. For example, here there was a rally of almost 50%, and here there was a rally of basically more than 40%. Here there was another bullish retracement of about 27%. And then yes, here there was another one. A further impulse of about 15%. But nothing extraordinary anyway. When these massive relief rallies start, they tend to be very significant. The same thing happened in previous bear markets as well. Now let's zoom in for a moment. This one was 40%, this one too. This here was another rally within a bear market of 65%. Then it pulled down the last bearish leg. This was during 2020, so COVID-19. And even looking at this specific one right here, no, there is absolutely nothing to see. This was simply a brief bullish impulse, so I would definitely prefer to just leave it aside for now. Anyway, we've seen that during bear markets, there can be very, very big rebounds, which I'll definitely be interested in trying to catch in the coming months when they start. For now, I don't think so. We're very close to seeing it take off. It's likely that we might still see a bit more weakness. So now, in fact, let's go see what the current short-term situation is for BTC. So in the past, this is the 200 period exponential moving average on the weekly time frame. We've seen that this moving average has been respected many times, both as support and as resistance. Of course, there have been some false breakouts, but these were then absorbed, allowing the price to resume its movement either upward or downward. And we can see that every time it was touched in the past, there were either positive or negative reactions. Now, this touch here last week was the first time it has been retested since basically 2023. That doesn't necessarily mean that from here we will definitely see a bullish rebound, though. Generally, we've already seen an initial reaction, meaning we had a bearish move down to $60,000, and right away we closed the week above that level. Unfortunately, despite the current situation, which actually pushed the price back up, I'm afraid that in the coming weeks it will drop again. And I'll explain why. So, the reason starts from this chart, which is the USD dominance chart. This chart essentially represents market liquidity, and when market liquidity, meaning this chart, rises, it means that investors are led to divest. So they sell their crypto, generally to buy USDC or USDT, in this case USDT, and as a result, it's as if this basket is being refilled with USDT, which in turn causes the price to rise. When it experienced this significant bullish breakout just last week, unfortunately, it actually made me turn much more bearish than I usually am. That is, as long as we were below this trend line, it almost seemed as if the whole bull market could still have a chance to continue. Unfortunately, though, after this strong bullish move, not only was this bearish trend line on USDT completely invalidated in my view, the bull market has been temporarily invalidated and broken, at least for now. But it is even currently finding some solid support on this other significant upward trend line. This essentially means that, which was also one of the reasons why, after this retest in the past few days, I preferred to significantly lighten my portfolio. I fear that this is a retest before seeing some kind of bullish continuation. Maybe not immediately, but this retest is dangerous. As long as this remains a support trend line on USDT dominance, unfortunately, the crypto market will remain. Consequently, seeing a bearish setup like this has naturally led me to adopt a much more cautious and disciplined approach to my trading. By the way, in my very next video, I am going to discuss several specific strategies that can be highly optimal and effective during strong bull market cycles to significantly reduce risk and protect yourself when situations like this occur. Because even though I also experienced a drawdown in my crypto portfolio, what helped me protect most of my assets was a kind of diversification. Diversification can take many forms, right? But we'll cover this topic in the next video because I'll be focusing specifically on what happened and on what that allowed me to partially protect myself from this kind of significant drop, which could include diversification into stocks or many other assets, both tangible and intangible. Anyway, let's get back to the current topic. As of now, consequently, as long as this trend line on USDT dominance remains, let's say, a support, it's likely that this kind of decline and ongoing weakness in the crypto market, especially considering that the stock market is at its peak, will continue. And generally think about it. If, for example, you had, let's say, hundreds of millions in assets that you were going to use in the financial markets, great. What is the condition that you would wait for before considering new accumulation in the crypto market? Probably a correction in the stock market as well. Why? Because when you finally decide to buy into the world of crypto, potentially even just focusing on major assets like Bitcoin and Ethereum, you are entering a very complex market. It's much riskier to buy them when the stock market is still at its peak. And it would become much less risky to consider buying when the stock market has already retraced several percentage points, so you can be confident that you are essentially aligned with a potential rebound. Not only in the crypto market, but also because the stock market itself will also rebound. Consequently, in my opinion, before we see strong buying pressure even in the market, crypto, they could simply be bounces. So just the rebounds we've seen just a short while ago, which could even be 30, 40, or 50% within the crypto market. Generally, those usually start after we've seen macro retracements also in the stock market. Macro retracements could also simply be 5, 10, 6, or 10%, but for now we're still at the highs, so at the moment I don't think we're in a position yet to see the crypto market have a major rebound, a significant one. Now let's go back for a moment to the topic of USDT. So as long as this specific chart right here remains consistently bullish for the time being, it is significantly more likely that Bitcoin could continue to see further price weakness throughout the coming weeks. We can generally notice that whenever BTC has retraced in the past, it almost immediately started to form what looks like an initial bear flag pattern. And then it created another bearish impulse. It's likely that in the medium term, this bearish impulse isn't over yet, especially since it left a wick here, a very significant shadow with the weekly close. Usually these wicks are at least retested up to 50%, and sometimes they are even invalidated again to the downside. But usually the win rate is really extremely high. In making sure that these wicks are at least revisited up to 50%. It might take days or even weeks or months though. But generally, these wicks with a very high probability do get revisited. However, at the moment, I believe it's likely that the price of BTC will return to these areas again in the coming weeks. It's likely, probably this sort of relief rally could start towards these levels, that is the 57 to 62 to $63,000 range, roughly this area here. From here, it could happen that when BTC returns to these areas, probably the Bitcoin dominance, which we can see in this chart, as you can notice here, is on a very strong monthly trend line. It's likely, in my opinion, that Bitcoin dominance will rise here, probably due to a subsequent pullback of BTC. As a result, we could then subsequently see the altcoins become even weaker, and in a moment, we'll also look at Ethereum and where it could go. And then later see a sort of relief rally across the whole market, but mainly for BTC. So let's look at a different scenario. Usually, to safeguard and protect yourself in the prevailing circumstances we face today, it would be highly beneficial to consider a preference for holding Bitcoin over the rest of the market. Crypto, because generally in bear markets, it's true that BTC usually crashes, on average by about 70% from its highs. We've seen that in the last bull markets, the more time passes, the more this drop, in percentage terms from the highs, keeps getting smaller. So in the last cycle, it was about 70%. Now let's take a look. It was around 78%. This one could very likely be lower. Maybe it could. Right now we're at 50%. Maybe it could even reach 60 something percent. I wouldn't aim for much lower levels unless there's a systematic crash across the entire stock market. But those areas are likely candidates to potentially see some kind of macro rebound zone. Now let's take a look at the heat maps for a moment. Sorry, let me take a step back. So in short, it's very likely that BTC did not bottom out here at $60,000. It's also likely that the altcoin market will continue to correct. Looking at the liquidation heat map, all the liquidity is to the downside. On Bitcoin, it's already been taken as far as we can see because this is the largest time frame we can look back on. But actually, what keeps me a bit bearish, besides the fact that USDT remains above this macro support, is also the fact that Ethereum still has some liquidity that could potentially be taken to the downside. Sorry, let me just update this chart here for a moment. This is the chart of the Model 3, the liquidation heat map. Now let's head over to the Bybit trading chart and take a moment to carefully plot out the entire annual time frame for our analysis. Annual. All right then, and basically, now let's take a very quickly look. As soon as it finally loads up, okay, here, as you can see here, around $1,500. First of all, around $1,600 to $1,700, but especially also here around $1,500. There is still potentially liquidity to be taken. Consequently, as long as USDT stays above this trend line, as long as the price of BTC remains trading consistently below this specific weekly situation. So, looking closely at the weekly time frame right now. Now, let's take a much more detailed look at this significant resistance level right here to see how the market might react in the coming days, which is essentially a long-term trend line. As long as this remains so bearish, it's very likely that the bottom hasn't been reached yet. Also because, considering the fact that even the S&P 500 is theoretically still at its highs, the moment the S&P 500 also starts to pull back, it's very likely that, as a result, then Ethereum and Bitcoin themselves could also experience a sort of continued downtrend. The fact that Ethereum still has areas below here that need to be liquidated makes me think that Ethereum will probably still have a zone of weakness, and probably that sort of bullish retracement we saw earlier on BTC could ironically start on Ethereum, maybe from these areas. It could potentially be around $1,500 because there's a very, very important liquidity zone here that might still need to be taken. And above all, if we look at the Bitcoin dominance chart I was showing you earlier, as long as it stays above that monthly trend line, it means that if BTC were to have some sort of further retracement, it's likely that Ethereum and probably the rest of the crypto market as well will show more weakness compared to BTC, which for now, especially Ethereum, has only partially managed to hold up. But unfortunately, I fear that if we look at the ETH BTC chart, we can see that here probably it will make another downward move, and this further drop would bring it into the next major support zone. And as a result, if BTC were to move back close again during this period to the lows, which could even just be $60,000 or $62,000, or maybe even a bit below that area, it's likely that this ratio will drop, and as a result, Ethereum could head toward the zones I have previously mentioned, around the $1,600 to $1,500 area. Okay. So that is all for this quick video update today. I will see you in the next video. Take care, guys.